In another volatile session of trade, benchmark indices extend losing run to a second straight day now. Weakness seen in IT and auto shares, pulling headline indices lower. Some strength in financial, oil and gas and metal shares lent some support. Sensex down 410 points from the day's high to shut shop at 55,381 after falling over 61 points. Nifty giving up 16,550. The street was unhappy with auto companies who posted May sales numbers. Bajaj Auto fell over 3%, turning out to be the top Nifty laggard. Other gainers include Apollo Hospital, Hindalco, Tech Mahindra and Bajaj Finserv. M&M continued to gain for a third straight day. JSW Steel, Coal India, HDFC Life, Kotak Mahindra Bank, some of the other blue chip gainers in trade today. E-Mudra made a decent debut on Dalal Street. The shares listed at 270 rupees on the NSE, a premium of more than 6% as compared to its IPO issue price of 256 rupees per share. Listing coming in amid a volatile market, sustained foreign fund outflows and concerns about receding global growth. E-Mudra is one of India's largest certifying authority and the IPO was subscribed 2.72 times. As we enter the second half of the calendar year, a slew of financial services are all set to get more expensive beginning today, be it borrowing loans or saving your money in banks, looking to buy a car or even aspiring to buy a property in the national capital. Sakshi Batra takes us through what to expect going forward.
Well, that's right, Abba. We'll have to shell out more for all these services starting today. Let's start off with home loans first. Our EMIs are set to rise as a slew of banks, including SBI, PNB, HDFC, ICICI Bank, have all raised their lending rates from 5 basis points to 40 basis points odd. Banking services for some will get expensive as Axis Bank has raised the average monthly balance for savings accounts to 25,000 rupees. India Post Payments Bank has also increased or introduced the service charges on the Aadhaar-enabled payment services like cash withdrawals, cash deposits, transacting of the mini statements, introduce these charges beyond the first street transactions now. Apart from this, owning a car or a vehicle or a two-wheeler and buying a new car or two-wheeler will also cost you more because the third-party premium insurance has also risen starting today in the range of 6 to 23%. Now, buying a property in Delhi is another going to be expensive area for you because the Municipal Corporation of Delhi has hiked the transfer duty by 1% odd. Only breathing space coming in for the 8-year prices as they have been slashed starting today by 1.3% and this is the first cut that has come in after 10 rounds of price hikes. But will this mean cheaper air travel for you and me? That's the question we are asking.
Thank you, Sakshi. Now, a day after Jan to March GDP figures showed the economy rebooting to pre-pandemic levels, auto sales in May have also shown a healthy growth on the passenger vehicle front, in fact bettering the 2019 levels in most cases. A blockbuster performance by Tata Motors, which posted its best PV sales yet, clocking a near 300% rise on 2019. Maruti, the country's biggest car maker, saw sales up 6%, while the number 2 Hyundai sales fell 0.5% on May, taking it to the third position in personal vehicles, so 0.5% on May 2019 if you see the corroboration there on those numbers. So third for Hyundai after Maruti and Tata. Mahindra personal vehicle sales rose 38% to just under 27,000 units. Skoda India rallied 300% on the popularity of new launches like the Kushaq and the Slavia. Toyota, however, posted a fall with sales lower than pre-pandemic 2019 levels. The increase in overall sales comes despite a continued shortage of semiconductors, which has led to waiting periods as long as 12 months in the case of some cars. The shortage is expected to continue, as Mahindra Group CEO Anish Shah told India Today and Aaj Tak News Director Rahul Kanwal recently at the World Economic Forum in Davos.
What we've seen as the world has changed over the last 2 to 3 years is there are various shocks that keep coming into the system. And therefore, a single source, for example, isn't a great idea. Because if you take a specific incident during COVID where a plant in Malaysia was shut down, that impacted supply chains for semiconductors across a large number of auto businesses. And if you don't have a second source, then that impacts production to a much greater level. So one is dual sources. Second is more standardization of parts across various models, wherever it's feasible. Some things are obviously not feasible, but in many cases it is feasible. These are all items that take longer lead times in the auto business, but our teams have been now working at it for the last 2 years and have got a lot of solutions around it. It's also sourcing chips in various different ways, relationships with chip makers and our auto tier 1 component makers. In the past, you always worried about the health of your direct suppliers. In this world today, in supply chains, you got to worry about the health of their suppliers and the health of that supply chain, and at tier 3 level as well. So it's a combination of all those factors. I think we're getting better at it now. Our teams are a lot more resilient to address any shocks that come about, and which is why it has eased a lot overall from our standpoint.